Hello financial fans, talk a little bit about how to go about getting into the stock market. I've been in the stock market in various ways over the past 40 years, and what I do mainly is buy stocks and sell stocks. I do not buy and sell options, puts, calls, derivatives of any kind. I buy and sell stocks, and I buy and sell only the stocks that are on the NASDAQ, NASDAQ, or New York Stock Exchange, NYSE. If you're in a different country, study the stock market in your area and find out what stock markets have the best regulations. I do not buy stocks from the pink sheets or the OTC over-the-counter stocks. So with that in mind, the first thing you will need when it comes to getting a stock is a broker. You can buy some stocks directly from the company, like McDonald's. You might be able to buy McDonald's stock from McDonald's, but that's not a good way to trade stocks. The best way to trade stocks is with a broker. I recommend stocks that sell more than 1 million shares per day. I recommend stocks that have a PE ratio of 10 or less as a rule. These are just general rules and they don't always apply, but learn how to read the information that is available to you, and do not buy or sell any stocks until you studied the market for at least a year. And you can make a portfolio at Yahoo Finance or some other financial page. Just make a list of stocks that you think you might want to follow. Pick about 20 or 25 stocks and keep track of them either every day or every few days. Check them out and see what's happening, whether they're going up or down, and why. The pages where they show you the individual stock, like if I was checking Ford stock, I would go to the page using the symbol for Ford. The symbol is F, the letter F. Go there, and then that will tell me not only the PE ratio for Ford and the volume for Ford and the amount of dividend Ford pays, which at this time I think they pay nothing in the way of a dividend, but it also tells the news of the day. So maybe Ford will do something that's real exciting that makes the stock go up, or maybe some earnings report will come out and it will be considered bad news and the stock might go down. Learn how to read the pages and remember, buy low, sell high. That's the key to making a living. A lot of people make a living in the stock market, and over the past 40 years I've almost certainly averaged 10% or greater per year, but there were some years when I lost money. And there were times when the stock market went down. 1987, October 1987, there was a big stock market drip, and it went down, and a lot of people sold then. That's when I bought. Buy low, sell high. Same thing happened on 9/11, 2001. The stock market actually closed after the news of the day was so bad, and then about maybe a week or 10 days later it opened up again, and I bought while the stock market was down. And that helps bring the economy back when people start buying stocks. And it also is the right way to trade stocks if you want to make investment money, and you can do good things with your money that you make. And if you choose not to get into the stock market, that also is good. There are a lot of things that are very good investments beside the stock market. You might find that you can make more money buying collectibles of some sort, or old cars, or real estate, or coins. There are a lot of ways to invest your money. Real estate should be a good way to invest one's money, but if you want to get into the stock market, get a broker. My broker's TD Ameritrade. I'm happy with them. They might be good for you, but check other brokers. There's TD Ameritrade, there's Fidelity, there's Charles Schwab, there's E-Trade, there's Webull, Webull. Just check a brokerage firm, find out what their minimum requirements are. And what you have to do with a brokerage firm, you have to send them money, not a credit card. You send them a check or transfer funds from your bank to their brokerage firm. And let's say you put $2,000 into the brokerage firm. Now that is yours to use to trade, and once the check clears, you can trade that $2,000. For example, you could, if the brokerage firm has no transaction fee and you have $2,000 in there, you could buy 10 you could buy 10 shares of a $200 stock, 100 shares of a $20 stock, and so on. Or you could diversify and buy a few shares of this, a few shares of that. And without being a financial advisor, I will tell you that I think being diversified is a very good idea, and that makes mutual funds attractive as a first investment. There are various types of mutual funds, including ETFs, exchange traded funds. If you wanted to trade some sort of fund that was diversified, you could trade a fund. I think the symbol is DIA, which is the diamonds. That means the Dow Industrial Stocks. Dow, you will hear on radio or TV news, you'll hear the announcer say, the market was down today, the market was down 30 points, the market was up today, the market was up 30. They're talking about the Dow 30 stocks, Dow Industrials, and that's an index. That's a group of companies which supposedly represents the American feel for the economy. These are all big companies, and there'll be 30 different companies, and they evaluate the value of each one of those companies each day, and they come up with a number, and they say the market is up, the market is down, dependent on that. So you could, by getting the DIA, the mutual fund, you could be trading all those stocks, small amounts of each one, but that's one way to invest. I don't recommend that, but it might be a good first purchase, and again, it might not. That's why you want to study the market for a year. Let's take a look at a few stocks, and I'll show you how I go about choosing stocks that I'm going to either buy or sell. Some of these stocks are stocks that I own, and I'll show you the numbers that I look for. And any page you go to, a financial page, they'll have this information. These numbers will appear for each stock. And in addition to these numbers, there'll be news about that company. If we're talking about Kellogg Company, then they'll have the information for the company, the financial information, but they'll also have news of the day. Maybe Kellogg comes out with a new cereal, or maybe they quit making one of the old cereals or something. But let's take a look at a few sample stocks, and I'll show you what I think of each one, give you an idea of how to analyze a stock. And good luck with your investing when you get around to doing that, but please wait a year if this is something brand new for you. We have to begin somewhere, so we shall begin with CVS Health Corporation. And we see under the word Yahoo on the upper left-hand side, we see the price $59.43. That was the closing price for CVS Health Corporation for today, and it's per share. One share cost you $59.43, and if you had 100 shares, move the decimal point 2 places to the right, you have $5,943 invested to have 100 shares. And in the first column, under the information that says CVS Health Corporation, we see the words previous close, open, bid, ask. I'm not interested in those right now. The days range I'm not interested in. The 52-week range I'm interested in. The 52-week range says $52.04 to $77.03 per share. So it's at $59.43 right now. So it's moving up from the low, and it still has a lot of headroom before it hits the previous high. It could go up. If news for healthcare is good, then this one has a lot of room to go up. And we see the volume is about 7.5 million shares for that day, and the average volume about 7.5 million shares. Then we go over to the next column. We've got some more information that's interesting. By the way, I want stocks that sell 1 million or more shares per day, so this one is 7 million. We're well inside the safe zone there. PE ratio, that's what I'm interested in, 9.44. That's under 10. I like that. That's a very good PE ratio. By itself, it doesn't mean a whole lot, but when coupled with a lot of other good numbers, that's nice. EPS, earnings per share, $6.29. That's a lot. And earnings date, I'm not interested in earnings date, forward dividend and yield. It pays 3.4%. Just if you hold on to it, you will get checks for dividends, and 4 times a year they'll pay that dividend of with the total $2. They'll pay it 50 cents, 50 cents, 50 cents, 50 cents. So you get $2 per year. 3.40 is what the percentage rate comes out to as of today's price. But it'll stay pretty near that unless it makes a remarkable move up or down. 1 year target, $78.76. Now to go from $59.43 to $78.76, and that's just somebody's guess, some educated guess. Might mean something, might not. CVS Health Care looks like a good stock. I do own that. I bought that a few days ago. So now let's go to the next stock that we shall take a look at. By the way, these are Yahoo pages, Yahoo's financial pages, lots of information. And if I wanted to, I could check down below all this information and get the news of the day for CVS. But I'm going to move on to another stock. And that next stock is Apple, famous Apple. AAPL is the symbol, and the closing price for this day was $117.51, and this is what is the date today, 10/20 of 2020, October 20th of 2020. And we look down the first column under the words Apple and then the 117.51. Then we look down, we see previous close, open, bid, ask, days range, and then we see 52-week range, $53.15 was the low for 52 weeks, 137.98 was the high. So it's creeping up toward the previous high, but still got room to go as far as what we can tell so far. The average volume, 173.5 million shares, so it trades a lot of shares. I like that. The PE ratio, the second column, 1, 2, 3, the third item down, PE ratio, 35.65, much too high for me. I like the 10 and below, and 35.65 means it's been pumped up to a somewhat speculative area. I personally wouldn't buy it here. I do not own it at this time. The dividend 0.71, which is less than 1%, which is about what you'd get at a bank, so I wouldn't be holding on to it. If I had it, I would sell it for something else. The 1 year target, 121.43, which is a little bit above where it is right now, but unless something brilliant happens at Apple, it probably is going to be sitting at those numbers for a while, but one never knows because Apple has surprised the market before. Now let's move on to the next stock. And this next stock is pretty close to penny stock territory, $5.10 a share. It was up for the day, and it's called Dht Holdings, and it's got some very unusual numbers here. We looked down previous close, open, bid, ask, days range. The 52-week range is what we're looking at. $4.77 to $8.83. So it's a low price stock that has been moving somewhat wildly, now $5.10 a share. Why is it moving? I do not know. The volume is 2.8 million, so about 3 million shares trading every day. And go to the next column and we look at PE ratio, 3.17. And under that we see EPS, earnings per share, made $1.61 per share on a $5 stock. That's pretty incredible to make that much money and have such a low PE, 3.17. I found this stock last week and I did buy a few shares. It's very, very risky. Forward dividend and yield. Now this is where it gets incredibly crazy. Forward dividend and yield. $1.92 is what they're planning on giving for people who hold on to it for a year as a dividend. 37.87%. That's outrageous. That's something very unusual going on. I don't know if this is good or bad. The 1 year target, $7.14, which is good. I definitely don't recommend this, but it would be something to watch to see what in the world happens with those numbers 1 year from now. Now let's move on to the next stock. And for the last stock that we actually analyze here, we'll look at Amazon. The price $3,217, which is a bit beyond most people's range. When I buy stocks, I like to buy 100 shares. Now, I certainly would not buy 100 shares of Amazon. I have purchased Amazon in the past, but on a very limited basis. $32.17 per share. And I'm going to skip down to the 52-week range, 16.2603 to 35.52, so it was higher than that, and it was much lower than that over the past 52 weeks. And the volume, surprisingly, 5 million shares traded on the average day. That's a lot of money at $32.17 per share. The PE ratio, I'll look on this middle column here, the second column, PE ratio 123.56, which means that's higher than I would want to go. I like 10 or less. That means people are expecting a lot from this stock. They're expecting it to go very high, which of course it will because it's Amazon. It's a big merchandiser, probably the biggest retailer in the world. There might be there's some company in other parts of the world. I guess they got a company similar to Amazon in China that does better, but that's a big company and they're expecting a lot. 123.56, I won't buy it at that price. Forward dividend yield, no dividend. And the 1 year price target $37.24.98, which would be a good capital gain if you wanted to buy it and hold on to it and sell it if it happened to get there. I wouldn't be a buyer of Amazon, but anyway, we've looked at several stocks here, and you've learned the basics of how to analyze stocks. Study the market for a year, pick out some stocks you like, study them, and imagine what would happen if you invested in stocks that you like, and would you buy them and sell them at a time when you would end up making a capital gains. And then of course you'd have to pay taxes on the capital gains and you'd pay taxes on the dividends, but wouldn't it be nice to have money to pay taxes on? I thank you very much for watching.